Hi guys, welcome back to another lovely trading video. In this one we're going to be doing breakdown analysis on DKNG, which is DraftKings. We did actually do one on this a few weeks back, I believe, but it's starting to break out and should provide some good trading opportunities. So quickly I want to go over to a plain daily chart so you can see firstly what resistance is kind of popping up. May have already stuck out to you, but for me personally, it looks like there is a resistance kind of around this 63.80 to around 64.80 area, because we can see obviously it tested here, faded back, kind of failed here, pulled back before retesting and succeeding, and again when it broke to the downside, that's where it tested before doing its strong move to the downside. We are just coming into it now. We saw we came into the area but couldn't quite close in it, so we pulled back. So this could be an indication that we're going to struggle to break through this area. So just a key area that I'll be looking out for. Because if we can hold above it, we will most likely get a strong uptrend. And where do we see that strong uptrend going to? Firstly, we do have this 65.13. You can kind of include it within this line just because it's so close. So kind of waiting for a hold above 65.13. And then if we can get that hold, we will be looking for a price target of around $70.72. Those will be our main targets. And maybe if you're long, good areas that could be to lock in profits just in case we end up getting a double top, which obviously the all-time high, or at least 52-week high, is at 74.40. So obviously keep an eye out for that. If we do break through an all-time high, we would be at a very overbought area, coming into around 77.75 cents. So just be keeping an eye out for that area. Because once it comes into this 77.70, that's where I would start turning a bit more bearish on it. I don't really see DKN going past that, at least in the near future. And I definitely wouldn't be holding anything long past that value and would start being a lot more short bias. If we did though somehow break through that 77.70 area, which would be the third deviation, then we'd be looking at the 79 and 85 area. Again, 79 quite unlikely because it would require us to break out of the third deviation. However, if we did break into that, we've also got that psychological $80 resistance where we most likely would get a big hesitation off and at least get a large pullback, I would assume. Again, if we do though somehow break through, we do have a top of range target of $85. Don't see DKNG going past there, but if DraftKings is able to break through there, personally I would not even be touching it because then it's just trading at extreme, and yeah, it would just be a very risky trade because if it's gone that high, why can't it continue? So it's risky to short, and also not that smart to be long in that area because more likely than not you're going to get the pullback. So it's just a weird area to be trading within. Now we will do some price targets to the downside, just in case you're interested in that. So obviously we are at the first deviation and we're able to close above it on the daily. That's why I'm saying that we most likely will get, why I'm looking more long bias on it, just because if we're able to hold above that, what that usually indicates is that you'll move to the next deviation. Obviously in this case it's not a massive move, it's only to 65.13. But if we can hold that, then the next price target is quite far away at being around $70. But yeah, so 62.80 will be a price target if we can close around the 7, or if we can get up to the $70 level. So that's level to keep an eye on if we push higher. However, right now we do have an area at 58.20. Personally, wouldn't be getting like a long bias investment or anything in that trade, but may provide a good either day trade or short swing trade bounce off that area. After that, we would be looking at 44 and 47. This is when we'd actually start looking to either do longer term swings, or even if you're looking maybe to invest, these are considered low risk buy entries. And then even further down, you've got $40.40. And then also 37.40, and then on the very extreme low end, 30 and 33. So basically in summary, these levels from 47, 80 and below, that is when you get each of those levels are basically considered low risk areas of buying, and so yeah, if you're buying up at those areas, you're more likely than not going to make money. At least that's what the standard deviations say. And again, on a clear chart, the only real resistance that sticks out is going to be this kind of $63 to $64 level. Just keep an eye on that. And then, again, I guess we can even draw something like this and get a support line like this. And when we pull back, it would probably line up with the 44.25, or depending on how long it goes up for, it may even partner up with the 47.90. So that's also another level to keep out, because it may just match with an existing support line. So that's the breakdown on DKNG. I hope you enjoyed the video, and I hope that gives you some insight at least to how I'm thinking about DraftKings. So hope to see you in the next one, and that's it. Peace.